Today on the Brisbane Property Podcast, we are going to be providing a very comprehensive market update on what's been happening across the Brisbane property market throughout October. And we're going to be breaking down the house market and the unit market and talking about what's happening in that rental space as well. We do hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison, and it is market update time.
It certainly is. Welcome back, everybody. We are going to be reporting on all of the latest data reported by CoreLogic in this episode. And as usual, we'll provide a summary of what we're seeing on the ground as well. Interestingly, Scott, I would say throughout October, a little bit more activity in terms of listings, so a little bit more choice for buyers. But I'm going to put it out there, and we're recording mid-November. I feel that the urgency in the market is starting to fade a little, and I feel that buyers are starting to have a little bit more time, especially in the markets that we're active in. So the market's definitely slowing down a little bit in terms of how quickly it's transacting, and that's something that the data is supporting, and we're going to be talking a little bit about that today as well.
Yeah, a little bit more time, not a lot of time, but a little bit more time. And probably if we look at a normal market, what we've all been used to in the past, I guess, and then COVID obviously hit and that changed everything dramatically. The market went very, very fast. We've seen since then that the market has moved fast. We've seen people looking at properties, had to do multi-offers, selling on the first weekend, straight after the first open, those types of things. Yes, we've seen a little bit of a change, not a massive change, but yes, it is starting to probably maybe ease off a little bit, I suppose. And it gives the buyers maybe a little bit more time to talk. We've actually seen a few pre-market and off-market opportunities, a little bit more of that activity here at Streamline Property Buyers, where we're seeing that for our clients. So that has probably been great for us to try and take a little bit of that pressure off. But we've still seen Brisbane still moving ahead. Yes, it hasn't gone, it's probably not that sprint that we've seen, but it is still jogging, and we're still seeing that movement of the property market in Brisbane, and it's still continuing to increase in value as well.
Yes, month on month, that is definitely what the data is showing, but the rate of growth is certainly slowing down as well, even though the prices are still escalating. As Scott's pointed out, it's more of a slow jog rather than a sprint now. But I do want to reflect back on Brisbane as a whole over the last 40 years. And we've looked at some CoreLogic data over the last month, which has shown the long-term view, what's actually happened in the Brisbane market over the last 40 years. And what is really interesting about this information is that over that time frame, which is actually quite a long, lengthy period of time, there has only been 6 brief downturns where dwelling values have actually been negative over the last 40 years here in Brisbane. So we have a very stable market compared to a lot of other capital city markets around Australia, and therefore it's a very reliable capital growth opportunity for people that are looking for a long-term set and forget investment. If we look at some of those periods where prices did retract slightly for short periods of time, the first period was actually when interest rates were rising back in September 1994. We've then got a period where interest rates were rising again in September 2004. We've got the GFC. We've also got rising interest rates and the removal of stimulus that was applied to the property market, which was in the early 2010s, I believe, and then the credit tightening in around September 2019. They're the 6 moments in time, along with, of course, the more recent rising interest rate environment in 2022. They are the most recent times, or they are the times when property values actually were in negative growth phases here in Brisbane, but only for very short, sharp periods. So the rest of the time, Brisbane's market has been fairly stable or in an upward trajectory. And therefore, the downside risk for people buying in Brisbane is lower historically speaking, compared to other capital city markets where we see more periods of growth and more periods of decline. So they're less stable markets. And I thought that was a really interesting fact to be able to share with our listeners today.
It is when you look at property, and obviously we talk about we're not getting into the market and getting out very fast because the cost to do that is too much in property. You're paying stamp duties, you're paying agents' fees, all those types of things. So when you look at that longer term play, and sometimes we talk about that 5-10 year sort of category, you've added this into a 40-year time frame. It's interesting when you look at it, and 1, 2, 3, 4, most of those are actually due to interest rates.
Yes.
Okay, so we had an episode last week where we spoke to Evan, and we were talking about what's probably likely to happen for interest rates, and there's no real forecast that they're going to rise and increase. Okay, and those are the majority of things that have affected our market in Brisbane. So we're not seeing that's forecast to happen. Which is a good thing for Brisbane, obviously. Those people, I've mentioned this before as well, a lot of this information, Melinda spends a lot of time writing blogs. So if you do want to jump on and read market updates, information, learn a lot more, jump on the website at streamlineproperty.com.au and have a look at the blogs. You'll see a lot of this information. This graph is on there as well. And you can actually get to understand this a lot more information a lot easier, I think.
And I want to then sort of state how much Brisbane has grown in the last 30 years. That's 3 decades of growth. We've had 454.8% growth in property values over that time. But I will say nearly 98% of that growth has actually occurred in the last decade alone. So, we've had some really strong growth coming through more recently. And of course, the past is not always the predictor of future performance. It's always good to reflect back on what has happened in the past to determine what factors were at play over those periods of time. But when we're looking forward, past performance doesn't always prescribe what's likely to happen in the future. The future depends on the economic environment as well as the demand drivers that continue to place property buyers in a position where they want to or can afford to purchase a home or an investment property in a particular location. And that's overlaid with the supply of properties in that particular location. And supply, of course, we've talked about this, is made up of those listings that are available immediately, but also that longer term supply in terms of what is being built and constructed and therefore what's likely to be delivered in the market to absorb some of that demand in the future. And of course, that helps you to really define the areas and the pockets where you know that the supply is just tight and limited, and therefore demand drivers are likely to put upward pressure on prices versus other areas where you might have a larger supply pipeline coming, whether that's availability of land that can be built out or zoning that enables much higher density development nearby. I mean, these things enable future supply. And these are the sorts of things that as a property buyer, you really need to understand if you're wanting to, dig deep into the fundamentals of property market economics. And that's obviously what we do when we're working with our clients.
Now, not selling Brisbane, but I think it sells itself, to be honest. If you're looking at investing into property and you look at whether it's regional areas or different capitals or whatever it may be, and you look at Brisbane on, as you say, the historical area, what we've shown in the past for the last 40 years, how it's performed, and then obviously the demand on the property, and you look at the population growth. Now, we've just had an election where we've got a new government come in. There'll be some changes on that side of things as well. We've got the Olympic Games coming, and I know we've talked about this since it was announced how many ever years ago now? Feels like a long time ago. But it is coming around, and there is going to be employment. I mean, there's employment opportunities. The infrastructure will start to happen now. It will ramp up. I think once this government settles in, there will be announcements. There will be things that will be built. There has to be things to be built. And that employment side of it will go up. That employment side will put a demand on more properties, and people will need the properties on that side of it. So we're having a population growth and we're getting a massive amount of employment too. So any tradies that want to move to anywhere, move to Brisbane.
There's a lot going on, isn't there? So just in the last 12 months alone, if we want to have a look at some of the statistics around the movement of people, Queensland had very strong population growth. We increased our population size by 2.68%. And a lot of those people that moved and relocated to Queensland actually landed in southeast Queensland. That's the southeast Queensland corner, largely around the capital city market. Additionally, over the last 12 months, Queensland has experienced an increase of 4.6% in the number of jobs available. So not only have we had more people move to the area, we've actually created employment opportunities for those people. And I know as an employer right now, it's actually pretty tough to find good talent to fill vacant positions. And we're hearing that from industry colleagues, but also from friends and family and others across multiple segments and multiple industries throughout Brisbane. It's really hard to find good talent because we have such high levels of employment right now. And these numbers that I've just quoted have come from the most recent CommSec State of States report. So Queensland's economy in terms of population growth and also job opportunities is actually very strong, and it's likely to get even stronger off the back of these infrastructure projects that need to be constructed and built in the lead up to the 2032 Olympic Games.
I think the other thing, I mean, the affordability we talk about with housing as well, and I know we've touched this on this a little before, where we talk about your bang for your buck. When we talk about what you can get in Brisbane, when you're looking at, say it's a $2 million house compared to a $2 million in Sydney or Melbourne, your proximity to CBD and those types of things, or, if you step up again to that next level, about $3-4 million sort of price range, what you get compared to what you get and your location, you're getting closer to the CBD. And we look at it and say, basically, yeah, you get a lot more bang for your buck in a city like Brisbane.
And look, it's interesting because Brisbane does have the second highest median values of all capital city markets now Australia-wide. But based on the PropTrack Housing Affordability Index, Queensland as a whole is actually relatively affordable compared to states like New South Wales and Victoria, and that is based on local incomes as a portion of property prices. So obviously that's a factor that can continue to drive demand for property in a local market. And what's really interesting, especially the trend that has emerged over recent months, is that more and more investors are actually looking to Queensland for their investment purchases. And when we look at lending data now, we can see that there's 40.5% of all housing finance commitments are actually made up of property investors. That's a huge portion. And in fact, that's larger than the typical buyer spread of owner-occupiers to property investors. So we're seeing more and more investors gearing up through finance commitments to make a purchase in Queensland. And again, that's not necessarily in Brisbane. These are state level numbers, but it is something that, tends to trend towards some of those capital city markets within each state. Additionally, another portion of the market where there's been a level of activity that is somewhat heightened compared to where it was months ago is those first home buyers, with 27.5% of all loan commitments going to those first home buyers as well. So the fact that we've got a huge portion of buyers based on those loan commitments made up of investors and first home buyers, it's not surprising to us that it is the lowest 25% of property values here in Brisbane that are growing at the fastest rate, because typically property investors and first home buyers are entry-level buyers when it comes to purchasing property. Not always the case, of course, and I will make that very clear, but for most first home buyers and property investors, they're shopping at or below the median value for the product that they're looking at in the market. So therefore, that's typically going to distribute some of that demand into the lower valued properties. And that's certainly what's playing out in the data as well.
A little bit more of that affordable market, obviously. Interesting, those investors, when you talk about the just over 40%, there's a reason why, and obviously that's vacancy rates, which we'll get to when we start to talk about the rental side of things. So listings, we're still seeing new listings rose by 1% in September, which is good. Total listings in October were still 4.2% lower than the previous year. So listings are still low compared to what we've previously had.
Yeah, just to clarify there, the new listings rose by 1% in October compared to September, and total listings was still 4.2% lower than the previous year. What I will say, though, I've done a little bit more analysis to share with our listeners this month in relation to the total number of properties available for sale in different regions around the city, because we're seeing some different trends emerge. And what I've done is, based on SQM research data, we've looked at the number of properties that were available for sale. That's the total listing volume back in March 2020 at the onset of the COVID-19 pandemic. And we use that as a bit of an indicator because this is the point at which we saw quite a significant market shift in many ways. And I've compared that to the total number of properties that were available for sale in October 2024 in each of the regions. Now, what was interesting is that areas like the Brisbane CBD, the total stock volumes were down 26.5%, inner Brisbane 22%, and then eastern Brisbane 37.2%, all lower in October 2024 compared to March 2020. Every other region around Greater Brisbane saw the total stock levels, that's the total number of properties available for sale, lower by more than 40%, and some areas up to 50% lower in October 2024 compared to where they were back in March 2020. Now, this is a very significant change in the fundamentals. When you have more than 50% less stock available for sale in a market where you've got strong buyer demand, of course, that is going to contribute to that price pressure. When you've got more buyers in a particular market because you've got more population moving into a region, or you've got more people wanting to upgrade from being tenants to being owner occupiers or first home buyers, and we saw in the data that the lending to investors and first home buyers is very strong. When you've got that demand competing for 50% less stock compared to 4 years ago, you're going to see that significant shift in values. And these are the fundamentals that are at play. And of course, this is the sort of information that we share with our clients to help them understand which regions are the most in-demand locations here in Brisbane, and where are the regions that we're going to see more supply coming. Just because the total number of properties available for today might be lower, it doesn't guarantee that that's going to be the case 5 years from now, especially if that's in an area where there's a lot of new land being released. Developers are actually creating new lots, and we're going to see new housing being developed. So it's all lots of different pieces of the puzzle that need to be planned out to determine the best place to buy for long-term price pressure, not just what's going to happen in the next month or two.
So selling of things, auctions, so auction clearance rates. We've seen the clearance rates stood at about 60.1% in October, while registered bidders averaged at 2.7 per auction, with 68.3 actively bidding.
Yeah, so the auction clearance rate was a little lower in October compared to September. So that's quite interesting. Also, there was a small decline in the number of registered bidders per auction month on month. I beg your pardon, I'll correct myself. There were a decline in the number of registered bidders month on month, but the auction clearance rate was slightly higher month on month. So what this tells us is that there's an active market, but the buyer depth is starting to ease. So the other thing that didn't change much is the rate of active bidding. So we still saw the number of people bidding remain relatively constant. So this is something that we're tracking because the last couple of weeks clearance rates have been a little softer. We are seeing those vendor expectations move ahead of the market because in most cases, we are still seeing those registered bidders turn up to bid, but we can't always see or find that there's agreement between buyer and seller on auction day in terms of where the value sits. And a lot of the time, we're also starting to see those buyers or properties pass in perhaps at auction, but there may be a result within the next 24 or 48 hours to a conditional buyer who cannot bid under those auction terms. And this is really important when you are out and about watching those auctions and seeing what happens at the auction, but then seeing the result within 24 or 48 hours later, you do understand what's happening in the market And it might be that people are a little bit more nervous to buy unconditionally, and they're needing some conditions with their offer to satisfy the price that the sellers are wanting to achieve.
Yeah, and we did see that last weekend at an auction in the inner north. A massive crowd, huge crowd at this auction. But again, you're talking that $4.5 million sort of price range, and it did sell straight away after auction under conditions. So obviously those conditions are important when it comes to the auction side of things.
I also just want to touch on one more fact that I failed to mention when we were talking about the number of properties available for sale, and in terms of that future supply of properties as well. Annual dwelling commencements, that's a combination of both units and townhouses. In Queensland, that was down 18.2% compared to the decade average. So even that long-term supply coming through into Queensland, and especially here in southeast Queensland, it is trending lower at a time where we actually need to build more homes. So the situation is definitely from looking at the fundamentals, is definitely that ongoing imbalance between supply and demand.
So if we look at Brisbane dwellings, any new listeners as well, just a reminder, this is Greater Brisbane that we cover here, so the Greater Brisbane area. Brisbane dwellings values continued to climb with 0.7% increase in October following September, which was 0.9%. That's a quarterly growth of 2.4%, which aligns Brisbane as one of the top performing capitals in Australia.
Yeah, that's been the case for many, many months. Brisbane and Adelaide performing at a similar level, Perth ahead in terms of its rate of growth. But these three markets continue to be those markets that are outperforming on a monthly, quarterly and an annual basis when we're looking at those price shifts. When we look at annual growth for Brisbane for all dwellings, it's sitting at 13% based on CoreLogic data up to the end of October. So it highlights the fact that that's, really a strong market. That's well above what the average long-term annual growth rate has been in the past. And yet we are in this market of a higher interest rate environment. So we've definitely got a multi-speed property market across all of Australia. For example, other markets such as Melbourne over the same period recorded a decline of 1.9%. So there's a spread of 14.9% between Brisbane and Melbourne in terms of how the performance of prices went over a 12-month period. So it's really important that any reports talking about the Australian property market really become irrelevant as a buyer or as a property owner. It's important to get an understanding of what's happening at a local level to determine what is happening in your market.
Yeah, and if you look at that eastern seaboard side of it, just on the month, I just noticed Sydney was declined 0.1%, Melbourne declined 0.2%, and then Brisbane, obviously, that increase of 0.7%. So
one thing that is trending across all capital city markets is that it is the affordable end of the market that is outperforming. And in fact, in the likes of Sydney and Melbourne, we've got the top end of the market that's actually in price decline according to the quarterly price trends. Looking at Brisbane, however, all segments of the market are still growing in value over the quarter. However, in the lowest 25% of property value, so this is the affordable end of the market, price growth up to the end of September was 4.5%, and up in the 3 months up to the end of October, that had declined slightly to 3.9%. So this is the affordable end of the market. And if we compare that to the top end of the market, that's the most expensive 25% of property dwelling values, up to the end of September, the quarterly growth rate was 2.1%, and up to the end of October, that had declined on a quarterly basis to 1.8%. So the middle 50% of the market has been tracking at 2.3% up to the end of October. So you can see that change in the rate of growth between different segments of the market. And we have talked about this for many months now when we do break down those dwelling values. The results between the house market and the unit market are still quite diverse in that the unit market is well and truly still outperforming. And because unit and townhouse values typically fall in that lower 25% of property values, it's going to skew this data slightly. But I think also overlaying the information that we shared earlier about investors and also first home buyers, you can see why there is that upward pressure on prices at the lower end, because typically there may be more buyers putting more demand on those lower value properties because of who the buyers are, the composition of those buyers.
Now, before we move on to house values, I'm not sure whether we did mention the median value for dwellings, $883,357 is the median value for dwellings.
And that can be a little bit misleading. So we do prefer to break it down into house values and unit values, which we will do right now.
So housing values, we've seen a steady increase again there, 0.7% in October, maintaining the quarterly gain of 2.1%.
Yeah, so that's a slight deceleration from last month's growth. So for the month of September, Brisbane houses grew 0.8%. October, it was 0.7%. So a really small slowdown, but the growth rate is still positive. So Brisbane in the house market also continues to outperform other capital cities such as Sydney and Melbourne. And in Brisbane right now, across all of Greater Brisbane, the median value to buy a house is $974,025. So anyone that is looking at buying a house with a budget under the median value, typically you're going to really struggle to buy anything in 10 kilometres from the CBD unless it's on a main road or flood impacted or has some other big impact, or it's a tiny block of land with an older house. So it's really important for people to understand these numbers are based on Greater Brisbane, which is a huge geographical location. And it's not just Brisbane City, which typically is an inner ring of 15 or 20 kilometres from the CBD.
So we've seen the annual growth there then for housing at 11.9% as well for housing values in Brisbane, Greater Brisbane.
And compare that annual growth rate for houses in Brisbane with the likes of Sydney, which experienced 3.9% growth, Melbourne, negative 1.8% growth, Adelaide, strong growth at 14.5%, Perth, definitely an outperformer at 22.4%, Hobart, in decline from 1.9% over 12 months, Darwin, 1% change in the positive, and Canberra 1.5% change in the positive. So Brisbane definitely, based on median house values, is still the second most expensive capital city market, although I know that there seems to be an adjustment in the data from last month. So Brisbane and Canberra are pretty much tracking on par. They're overtaking each other month on month based on adjusted values that CoreLogic do put out throughout the month. But yeah, Brisbane and Canberra pretty much in second place, give or take a thousand or two.
So the unit market, and as we've mentioned for a while now, the unit market has been performing very, very well. It still remains strong. In the month of October, we've seen an increase of 1%. That's the quarterly growth to quite an impressive 3.5%.
Yeah, and year on year, units in Brisbane have actually increased 18.8%. Compare that to housing, which year on year house growth was 11.9%. So obviously that's a big difference in the rate of growth. We've seen that based on the demand for townhouses and well-located units, especially in blue chip locations. So they've become a very attractive alternative for housing, especially for first home buyers, but also for investors, because the yields on units and townhouses the gross yields, that is, are definitely higher than the yields on a house because house values have escalated so much. And even when you account for some of the additional holding costs, including body corporate fees, we have been finding a lot of the net yields are actually better in that unit and townhouse space compared to the house space as well. So obviously these are the sorts of things as a property investor that you assess to determine what's the best long-term opportunity for you.
So the median value for a unit in Brisbane now sits at $669,254. As you said, that'll appeal to the investors because the gross yield is around 4.5%.
Yeah, and I think that Brisbane's unit market has remained a key performer, and I think that's because of affordability shifts. If people are shopping with a budget, and remember, first home buyers have those stamp duty concessions in place up to $700,000 purchase price. So the median value for a unit sits below that threshold, whereas where you would need to go to buy a house under $700,000 in Greater Brisbane is going to be a very long way from the centre of the city. And that works for some people, but that also depends on the lifestyle that they're wanting to live. And we have seen a shift in how people want to live for convenience compared to people wanting to live on the outskirts and then having to travel into those employment hubs. So I think this is a shift in a generational shift, I guess you could say, off the back of COVID. We saw everyone wanting more space, but just in the last couple of years, we've actually seen people now wanting that lifestyle and wanting to be close to the activity, the art centres, the coffee, the supermarkets, etc., rather than being car dependent.
So as I mentioned earlier, when we're talking about investors and we look at this rental market, we're still seeing a really high demand on properties there. Vacancy rates steady at 1.1%.
Yeah, so that was up to the end of September. The October data has just been released. Vacancies dropped slightly to 1%. However, what I will say is that despite the fact that we are in a very tight vacancy environment here in Brisbane, rents have really slowed down in terms of the rental price growth. So over the last 12 months, dwelling rents in Brisbane increased 4.1%, which is below the national average. And we've seen that deceleration in the last quarter. In terms of the house market, rents are up 4.4% in Brisbane over the last 12 months. And in the unit market, rents are up 3.2%. So we're definitely experiencing a cap in terms of what people are prepared to pay for rent, simply because we've got tight vacancies. What appears to be happening is household formation is changing, and we're starting to see more people grouped together to rent properties so that they remain affordable. So I think, again, this is going to be a shift that we'll continue to observe in a market where it becomes less affordable for people to continue to rent independently, and we'll start to see household size increase again. And again, just a result of, higher costs of living, and people need to make some sort of compromise to continue to maintain their lifestyle.
Yeah, we do see that a lot, where you get a lot of students especially jumping in and having 4 or 5 in a house. Nothing wrong with it at all. I remember years ago I did that myself when I lived in Sydney. There was about 4 or 5 of us lived in a house, and yeah, you actually have a lot of fun, and you can afford to pay the rent and get into a decent property as well, which is also great for people to be able to get into properties and be able to rent something.
Now, of course, vacancy rates by region, there is some regional variation, even though at a citywide level, vacancy is currently sitting at 1% at the end of October. We've got the Beenleigh corridor. It's at 0.7%. So that tightened slightly between September and October by 0.1%. The Brisbane CBD vacancy rate's stable month on month at 1.9%. So a little more choice for tenants in the CBD region. Eastern Brisbane suburbs vacancy tightened. It was 1.2% in September. In October, that reduced to 1.1%. Inner Brisbane, we went from 1.4% in September down to 1.2% in October. Ipswich, 1.2% in September, and that increased to 1.3% in October. So a little bit more choice in Ipswich. Northern Brisbane, still a very tight market. It went from 0.8% in September through to 0.7% in October. So North Brisbane and the Beenleigh region are the tightest areas in terms of vacancy. So if you're a tenant in these areas, these are the areas where there's fewer properties available to rent. Southeast Brisbane vacancy is sitting at 0.9%. So that's down 0.1% from September. Southern Brisbane sitting at 1.2%. That was slightly up by 0.1% month on month. And then West Brisbane, no change. Vacancy there sitting at 1.1%. And I think it is important to really break down the regions, because when we talk about Brisbane data, Greater Brisbane is such a large geographical area that we know what's happening in the northern suburbs is likely not going to be the same as what's happening out in Ipswich or down in the Beenleigh corridor. It's so important to get an understanding of what's happening at a local level, and then that's going to give you more information to make an informed decision if you are a tenant looking for a place to rent, or in fact, if you are a buyer looking to buy, or an investor looking to purchase a quality investment property.
So a bit of a summary. And before we jump into that, I don't think I've mentioned the weather for quite a while either. It's not even summertime in Brisbane. I tell you what, it's actually getting pretty warm up here.
Storm season.
Storm season's happening a lot. My 5:30 swims are actually not cool. They're quite warm. And also, I just do want to a quick shout out to our listeners as well. I do want to say a quick hello to John and Philippa too. Talking to John during the week, and he said he loves listening to the podcast. We love giving this information out, and I hope it is useful as well for everyone that does listen in. So a bit of a summary for the for Brisbane.
I would like to start the summary by looping back to what I said right back at the beginning of the podcast, where we are starting to see the market pace slow down slightly. And I think that is supported by the fact that the median days on market, according to CoreLogic, have increased. Not significantly, but 12 months ago, the median days on market was 19, and now the median days on market is 22. So we see these small changes on the ground when we're out and about, and I think that it consequently comes through in the data, and we're certainly seeing that play out at the moment. Scott pointed out that there's a little bit of activity, a bit more than normal in that pre-market space. They are properties that we know there's a motivation to sell. And of course, as buyer's agents, we can potentially get through those properties prior to those being listed online. And if there is an opportunity to secure them, generally we're able to give a seller some certainty before Christmas, which is why there's a little bit of activity more than normal in that space, because sellers have a level of uncertainty in a market that might be slowing down a little bit. We often talk about in real estate, from Melbourne Cup Day through to Australia Day, things slow down. Buyers are on holidays. It doesn't mean all buyers are out of the market, but we certainly see a slowdown to some effect in that space.
You also see some opportunities as well.
Absolutely.
So look, again, Brisbane, I just think there's a lot of positive things at the moment. We're seeing a little bit, as we said, a bit more time to look at properties. We're seeing that supply and demand side of things. There's a lot of activity for employment. There's opportunities for growth there. As I mentioned earlier, a new state government, that will probably mean we won't have any significant changes to any legislations. So that's a good thing as well. We'll have a bit more stability on that side of things. Interest rates, if they do sit tight, which is everyone is sort of forecasting them to sit tight until at least early to mid next year, and I don't think there'll be much of an increase. It all looks pretty positive for Brisbane, I think.
Yes, and of course the new state Liberal government, I think that significant legislative changes in the real estate space are unlikely. So potentially that's going to provide further market stability as well. And as Scott pointed out in our interview last week with Evan, we talked about the fact that interest rates are unlikely to change early in 2025, but we should start to see those interest rates fall at some stage closer to the middle of 2025. And of course, anything could change between now and then, but it is something that a lot of the buyers and of course the sellers are talking about, because that can cause buyer demand to increase. It certainly improves borrowing capacity, so it does have an impact on demand when that happens.
Yeah, I wouldn't be waiting around too long, because there might be a bit of a rush when that does happen. So look, that's our market update for this month. Hopefully that's been great information. I will let Melinda wrap up as I normally do from myself. Take care. Hope you have a good week, and we'll talk again next week. Thanks very much for listening. Bye for now.
Thank you again for joining us on the Brisbane Property Podcast. We hope you have enjoyed this October Brisbane Property Market Update, full of all of the data, which I love to share with you every single month. As always, if you have enjoyed this episode, please share with friends and family. We would love for you to leave us a review. It really does help others to find the podcast so that this information touches more people and benefits more people across the industry. We hope you have a fabulous week, and we look forward to speaking with you again soon. Bye for now.